Good afternoon, everyone. My name is Lauren Heller, and today I'm with Julie Coover from American Family Insurance, the Julie Coover Agency. We're here today to talk about the changes that are happening in insurance. Julie, what can you tell us about that?
Property insurance over the last few years has experienced some turmoil, and if you haven't already seen it in your own homeowners coverage, you probably will in the next 18 months or so. So I have been talking to a lot of people who've had a lot of questions, wanted to put it all together in one spot so that so it'd be easy for anyone to share or understand.
Excellent.
All right. So over the last couple of decades, homeowners insurance has really taken care of clients quite well. And we have trained our clients, especially in the Midwest, that there are some things about your homeowners insurance that are just going to kick in to pay for your coverage. And a lot of things are paid at full replacement cost. So traditional homeowners policies have given you full replacement for anything that happens that's both sudden and accidental. And that has broadened itself to also include storm volume, which has really wreaked havoc on the insurance industry. So you've probably seen in news articles or on social media that a lot of this is happening on the coasts, California and Florida, with massive storms that go through there, or with wildfires. And we see a lot of wildfires in the Western Midwest. So Colorado sees a lot of wildfires. And then, of course, the Maui wildfires made a massive impact on insurance as well. So you think, okay, well, what does that have to do with me in Kansas? So think about Florida and think about the hurricane damage that can happen. In Florida, you can no longer experience hurricane coverage on your existing homeowner's policy. You have to have a separate rider or a separate policy to cover hurricanes in general, because hurricanes are a known and expected loss opportunity in Florida. They have to be covered separately and have their own separate premium associated with them. Um, and that helps control the coverage and the cost for the homeowner's insurance itself. Well, over the last 30 or 40 years, homeowners insurance in the Midwest has trained our customers to just wait for a storm to come through, and we'll be replacing your roof. The problem with that is that they had to draw a line in the sand somewhere to determine what cover or what qualifies as a total loss and what just needs repairs. The problem is that what qualifies as a total loss doesn't necessarily impact the integrity of the roof or put the roof into a position where it's likely to leak or likely to fail. So we've been replacing roofs before they actually need to be replaced. So your traditional homeowners insurance is likely to cover a full new roof about every 8 to 10 years. Um, an average roof in this area is about $20,000. So if you figure if we were conservative and replaced your roof once every 10 years because it was eligible for replacement, even though it hasn't failed, and we paid out just $20,000 each time, we would have to collect at least $2,000 in a year in premium just to cover the roof. And that does not include if you have water damage, or if you have a fire, or if you have a tornado come through and wipe out your whole house. We could be on the hook from the insurance perspective for hundreds of thousands of dollars, and we've already exceeded the amount of premium in just by paying out for your roof. So from a business perspective, it just doesn't really make sense to invest in a business that is going to pay out more than they collect, right? It
Right.
doesn't. So, over the last few years, just over the last 4 years since COVID, we have had year over year record numbers of claims turned in Every year for the last 3 years has been more claims than the year before, and every year has been a record. Those claim payments are paying out at a higher level than ever. Every year, it's been record amounts year over year. And people are using their insurance more as a maintenance plan than a catastrophe, what if. And I just realized that catastrophe is spelled wrong on that slide. Super. So so as we move on, um, it can't continue to go down this road. So there are a lot of things that can be done to help update and change that from an insurance perspective. The first is rating structure. We have three levers we can pull. We can increase the rate, but if we increase the rate enough to cover a new roof every 10 years, no one's going to want to pay those premiums. It's going to double and triple the rates. Now, does that mean we're not taking rate now? Everyone's taking rate right now. Every company is going to take an increased amount of property insurance rate because over the last 3 years, we've paid out more than we collected in premium. So insurance companies have to make up for that and plan for the future. The second lever is eligibility. I have a lot of customers who come to me and say, well, I've never filed a claim. Why should my rates go up? Well, the reason your rates go up even when you don't file a claim is because um, the possibility of you having a claim does increase over time due to the age of your roof, especially, and just due to statistics. Most homeowners file a claim once every 8 to 12 years, give or take. But I can promise you that the people who are filing claims are having a much greater impact to their rate than those who are not. And people who are filing multiple claims within a 5-year period could be at risk of either being canceled from their current carrier or having a hard time getting insurance from a new carrier because they're coming with existing claims.
Yeah.
So that being claims free for 5 years is really key to keeping the best rate that you can keep on your insurance.
Okay.
The third lever that can be pulled is coverage. And when we're talking about coverage, we're talking about deductibles and replacement cost. So in the rating structure, what's changing there is not just the overall rate, but the way that it's rated. And especially in the Midwest, more coverage factor is being built into the wind and hail risk than any other risk on the policy, because that is the thing that's most likely to impact you. You are most likely to file a wind or a hail claim. So depending on the location of your home, and the frequency of which you have filed hail claims in the past, your rate will be impacted by how likely your home is to be hit by wind or hail going forward. And this goes down to the census block. So with the sophistication of storm mapping that's available in technological databases and in meteorological databases, there are a lot of opportunities for insurance companies to know exactly where hail has hit. And if it's hit
Mhm.
in that same place, multiple locations, that location is going to end up with a higher rating structure. So you may
Gotcha.
see a great increase on your home's premium. And a lot of that may be due to the likelihood of your area having a wind or a hail storm.
Just due to the frequency in which storms are hitting.
Yes,
Yeah. Okay.
absolutely. And storm load across the country, across the world has increased at an astronomical rate over the last 10 years. And meteorologists predict that that's going to continue over the next 10 years. They don't expect that storm load to decrease. The level of those storms causing billion-dollar losses is massive as well. And again, in the background, you may think, well, what do the storms in Florida have to do with me here in Kansas? I don't know if you're aware of this or not, but insurance companies insure their insurance. We have reinsurance to cover those catastrophic claims so that if we are hit with paying out $1 billion for a single claim, we can get some of that reimbursed from our insurance carriers, what we've insured for that. Those reinsurance companies cover the entire country or other parts of the world. So their rates are all impacted by those billion-dollar storms that aren't impacting Kansas and follows down into what we have to charge for rate for this area as well. Eligibility. So a lot of people don't realize this either, but when you call your claims office, your corporate claims office directly, they are required by law to file a claim for you if a loss has already occurred. If you want to discuss whether or not it's worth filing a claim, call your agent directly before calling the company because your agent can walk through with you whether or not it is a valid claim. The last thing you want to do is file a claim that ends up not paying out anything. And then you have a claim without payment on your record that will affect future eligibility. It doesn't make any sense and it doesn't seem fair, but it does impact it. And I don't want that to happen to you. So make sure you're talking to your agent if you think you may have a claim to file and they can talk through with you whether or not it makes sense. Prior claims history is going to be addressed for both existing customers and new customers. So I've already seen companies, including American Family, unfortunately, but I've already seen companies non-renewing customers because of their prior claims history and also declining customers that we may have previously been able to take because of their prior claims history. And claims are viewed for the last 5 years. So you're trying to have that 5 years claims free in order to maintain the best coverage you can. With that, there's also a difference between monoline and multi-line accounts. So if I'm looking at an account where I'm writing home and auto and umbrella and life, we've got that whole bundle. The claims eligibility is going to be a little more broad than if I'm just trying to write a homeowner's policy by itself. It gives us the ability to help avoid those additional gaps and overlaps by having everything in one place. And the insurance company wants to keep that bundled package, so they broaden that eligibility.
Okay.
And then in coverage, this is the biggest piece that's going to affect you right away. And these are the things that are coming down the pipes. So there are several different things that insurance companies can change on coverage. It does take different amounts of time in the background because they have to have these changes approved by each state's Department of Insurance. They have to rewrite amendments to the policies, have those approved, and then roll them out to customers. Changes will only happen at renewals. They will not happen in the middle of a contract term. So if you renewed in December and you haven't seen anything about this, keep an eye on your renewal for this coming December because you'll probably see some kind of a change. The first change is going to be in deductibles. And again, almost everything is going back to wind and hail for what I'm seeing in this part of the country. Wind and hail is really the most likely claim. So think about your roof in terms of maintenance. If you're thinking about your home overall, how often do you have to paint? Like every 7 to 10 years. How often
Right.
do you replace your windows? Every 20 to 30 years. How often do you replace your heating and cooling system? Probably every 15 years or so. Your roof is also a maintenance item. And a 30-year shingle in this part of the country lasts somewhere between 20 and 23 years. So planning for that expense and planning for that replacement should be part of your home ownership plan and process. Waiting for your insurance company to replace your roof is not going to be a good plan going forward because your insurance company is going to split the cost of that roof with you. They're not going to be covering it in full once it's 20 years old. We would expect that a 20-year-old roof is going to have enough hail hits to need to be replaced. And at that point, because that is um, an expected instance, it's no longer considered sudden or accidental. So versus RCV is actual cash value versus replacement cost. And the replacement cost would be traditional. We pay or you pay the deductible, and the insurance company pays for every other penny. The only thing out of pocket is your deductible. With actual cash value, the insurance company says, hey, I know you got a 20-year-old roof, and we know it's probably going to sustain hail damage. So at that point, we're going to split the cost of that roof with you. We're not going to cover it in full because we know that's a maintenance thing. You know it's a maintenance thing. You've probably been saving up to replace that. If it's wind and hail, we'll cover it with you. Um, Newer roofs, though, you'll still find replacement cost coverage because we don't expect a 2-year-old roof to sustain hail damage. That would be unusual. So that would be still a sudden and accidental loss. As
Okay.
far as the deductibles go, the wind and hail are seeing higher deductibles. Some companies are doing a higher flat deductible. Some people are doing a higher percentage deductible. And a percentage deductible is a percentage of your dwelling coverage on your home. So if you have a $500,000 home and your deductible is 1%, then your deductible is going to be $5,000. If it's a 2% deductible, it's going to be 10,000. If it's a 3% deductible, it's going to be 15,000. And yes, I have seen companies offering a mandatory 3% wind hail deductible. That is happening. So keep an eye on your declaration pages and your notices and make sure that you know what is happening with your policy when it comes up.
Okay. That's good to know.
Mhm. So what can we do from a client and from a customer perspective? Um, keep in mind that your homeowner's insurance is designed for catastrophic loss. It is not a warranty. It is not there to cover home maintenance items, and your roof is a maintenance item. It's something that you should intend to replace. And then after 20 years, if you didn't have to, fantastic. That's an extra rainy day fund to keep on the side. Cover it with a high deductible if you can afford to have a high deductible. I always recommend carrying the highest amount of deductible that you are comfortable being out of pocket if you have a claim. Because the next one down, avoid filing small claims. If it's only going to pay you $1,000 or $2,000, don't file that claim. Keep it to yourself, cover that loss yourself, and keep it off of your homeowner's policy. Third, keep your home maintenance up to date. Make sure that there is no space for critters to get into your attic. That any repairs that need to be done to your roof are being done so that it stays in good condition for that whole 20 years. That your paint is being repainted every 7 to 10 years to avoid wood rot. That you are just keeping an eye on everything that's going on with your home. That will help reduce the opportunity for claims to happen. And then review with a trusted advisor for gaps and overlaps. And if I can be that advisor for you, I would love to do that.
Awesome. Well, this is such a fantastic presentation, and I've been taking like copious notes throughout. I think there's just so much good information in here. It sounds like there really are a ton of changes coming down the pipeline that like consumers need to be aware of.
Mhm.
So some of the notes that I took questions wise, so a couple of the things that are standing out to me for sure, we should not file a claim unless we really have to. So truly it needs to be in the event of like a disaster or an emergency.
Mhm.
Another is try to remain claim free for 5 years.
Mhm.
If you can, if you can manage that. And then something else I was curious about, will insurers stop covering select zip codes if storms are just frequently pounding that zip code? So if, there are certain areas that just continuously getting hit, is it possible that insurers will just say, we're not covering that area?
That is a possibility, and I
Okay.
have seen that happening, not necessarily down to the zip code level, but I've definitely seen it at the state level. Um,
Okay.
as an example, there have been a big company insurers who have pulled out of Florida altogether for five
Right. I have
reasons.
heard that.
and in California where they've stopped writing new business altogether. And then there is actually a big company right here in Kansas that will no longer be writing property insurance either.
Wow.
So I'm seeing it more broad even than just a zip code, taking out an entire state. I know we also will see that down to the zip code level in the commercial arena. And I have seen American Family even make that change for apartment complexes and hotels where you've got a lot of roof space in one block, where they have chosen entire counties that they're no longer going to write new business and that they're non-renewing existing business.
Wow.
So yes, that is something that may happen going forward. So you want to make sure that the company that you are insured with has a really strong financial rating through AM Best and that they are positioned to be able to pay claims if something happens.
Right. Okay. Very good information. Another question that I have is, so, there are companies out there that, people don't necessarily have a relationship with an agent like you. They're constantly just dealing with someone over the phone. So if their policy comes up for renewal, would they be alerted to some of these changes prior to
They
it coming up for renewal?
they are
How would a consumer know?
insurers are required by law to notify um in writing. The problem
Okay.
is the problem is that most consumers don't read the 50-page document. So,
Okay.
yeah, so when you get your renewal packet, you don't have to read all of it, but sift through it. There should be at least a page that says notice of decline in coverage or change in coverage or change in deductible. There should be something in bold print that says this is changing. And
Okay.
I would highly recommend at least sifting through that big document this time around just to make sure, because it's going to happen a lot.
Right, because I really, you mentioned kind of changing from that flat rate deductible to that percentage. I feel like that's a really huge change,
It is.
that somebody could easily overlook as
Mm-hmm.
their renewal comes up. So that's really significant in my mind.
Yes.
Um, so let's see. So if someone is about to get a new roof,
Mm-hmm.
I've noticed that with roofing companies and some of the manufacturers now, and maybe it's always been that way, but I've seen it more and more where there's storm shingles now that are supposed to be made more durable,
Mm-hmm.
wind resistant up to a certain degree,
Mm-hmm.
hail resistant up to a certain degree, obviously within manufacturer warranties. Is that something that insurers are looking at and saying, if you get these things, is there a discount? Is there benefits to having that kind of roof put on?
Absolutely. So what you're looking for is an impact resistant shingle, and
Okay.
it will carry either a class 3 or class 4 UL rating. And
Okay.
that will be listed on the shingle paperwork. It'll tell you if it's an impact resistant shingle. And that will allow an additional discount on the homeowner's insurance, because it does stave off the possibility of sustaining hail damage for at least that first 10 years and makes it even less likely that you'll end up having a claim in the future.
Okay.
Definitely.
And then a couple more questions. So we've talked a little bit about like I've answered or asked a lot of questions about home insurance. Now, what are some things that might be standing out about auto as it relates to any of this? Are there any things that, really stand out as it relates to auto policies in
Yes.
all of this?
Yeah, absolutely. So with car insurance, we've seen a similar increase in the number of claims that have been submitted and the amount of payment that's going out. But it's not necessarily storm load that is the problem. Storm load, of course, impacts the number of claims that are being submitted. But the reason that auto insurance policies are paying out so much more than they used to is that car values are still higher than
Oh,
we've ever seen. There are
gosh.
more and more $100,000 vehicles on the road than ever. Um, and one thing I would really caution is that the state minimum for coverage is only $25,000. If you have less than $100,000 of coverage for bodily injury and property damage, I strongly recommend increasing that coverage. The cost for increasing from the state minimum up to that 100,000 is minimal. You would be surprised. It's not like quadrupling your expense to do that, and
Okay.
it gives you so much more appropriate coverage. But I have a lot of people who ask, well, my car keeps getting older, or I only have liability. Why does my rate keep going up? Um, it would make sense. We would think that the biggest risk is that my car keeps depreciating in value every year. Why should I pay more for insurance? But it's because all the other cars on the road keep getting more expensive, and all of the repair costs keep going up. Labor costs continue to increase. Materials costs continue to increase. So if we're not totaling out your car and we're repairing it, the repair this year is going to cost more than it cost last year, even though the value of your total vehicle might have gone down. You've probably experienced that if you had to replace your tires in the last couple of years. The cost for a four-tire replacement right now, whew, I don't know if you've had to do it, but I was a little shocked the last time I
Yeah.
had to do it. Uh,
Everything with inflation has gone up for sure.
yes.
Um, just another question, and then I think this is maybe my last one. So we're noticing this trend with kind of eco-friendly everything, right? Stuff with regard to homes, but also with cars. Is there any benefit or anything that you're seeing changing with regard to insurance coverage or anything you want to say or recommend to people with regard to like the electric vehicles or anything like that that you want to share? Is there anything?
At this point, and because of how much has to go into making a change to an overall policy or coverage, at this point, I'm not seeing that dramatically. Um,
Okay.
I think insurance companies are so focused on being profitable and being in a position where they can pay claims that further restricting coverage on that end, as far as um, eco-friendly or green technology, hasn't really been addressed a lot. What I can tell you is that if you have solar panels on your home, that is something to discuss with your agent, as every company handles those differently. Some companies want to make those a separate structure. Some companies just want to increase your coverage on your home. A standalone structure, maybe may have different eligibility than an attached structure. So that would be the biggest thing I would recommend asking about is solar panels.
Wonderful. Okay. Thank you so much, Julie. Appreciate your time today. This was very, very good information, and I really learned a lot.
Thanks, Lauren. Just a little note, I am currently licensed in 6 states and have access to 13 others. So if you or your family members or anyone you know is looking for quotes or that additional set of eyes on their coverage, I'd be happy to review for you. Even if American Family is not the best fit, my contact information is here on the screen. You can reach out to me at any time.
Okay. Wonderful. Thanks, Julie.
Thanks, Lauren. Have a great day.
You too.